Hi, welcome to today's awesome meeting and class. Today we're going to be talking about an important topic known as the chart pattern or chart formation in the forex market. What do I mean? You can't trade profitably in the forex market without learning about the chart pattern in the forex market, without having a full knowledge of the technical analysis, the background, the chart you say, oh, why are these things going up? Why are these things coming down? Why are they like this? Why are they moving this way? Why are they moving this other way? Why are they moving this other way? Now, chart pattern, that's the chart formation in the forex market. Now, all these candlesticks, each of these, they are known as candlesticks. For those of us that have the knowledge, each of these, they are known as the candlesticks. Now, the coming together of these candlesticks, they all come together to form a chart formation. They call it chart formation in the market. They all come together to form a particular pattern in the market. Each of these candlesticks, whether the bullish candlestick, which are the green, which are represented with the green colors, and the bearish candlesticks, which are represented with the red colors, they all come together to form a particular pattern in the market. So why do we need to learn this pattern? Why do we need to have adequate knowledge of this pattern? Now, some persons, they will be like, oh, markets, they are moving up, markets, they are moving down. Markets, you see markets going up or you see market going down. How do we know that this market that has been buying will continue buying? How do we know that this market that has been selling or moving downward will continue selling? How do we know that this market that has been buying for the past 2-3 weeks will soon reverse and start selling? How do we know that this market that has been selling will soon reverse and start buying? So that's the work of this chart formation. Understanding this chart formation, it will help you to know that this market has been buying for the past 2-3 weeks, 4 weeks, 1 month, 2 months, 3 months, 4 months. It's high time for it to reverse or start selling. And this market that has been selling, it's time for it to reverse. And this market that has been buying, it's not going to reverse, it will still continue buying. And this market that has been selling, it's not going to reverse, it will still continue selling. So these chart formations, they pass informations to you as a trader, helping you to understand the overall market structure, overall market. Understanding this chart will help you to interpret the structure of the market, will help you to interpret the market to a reasonable point. They will help you to understand and interpret the market. This is a very sensitive topic. Yes, you might know your candlesticks, you might know everything, but understanding the chart pattern and chart formation in the market will help you to understand the market very well and how market moves and why it moves in that manner. So there are types of chart pattern. There are types of chart pattern. We have basically two types. We have the reversal patterns and the continuation patterns. The reversal patterns and the continuation patterns. Now, what do I mean by reversal pattern, or what is reversal pattern? Reversal pattern, this is a pattern whenever it's spotted in the market, it's passing information to you, or it's trying to tell you that market that has been buying, it's time for it to reverse, or it will soon reverse and start selling. And that market that has been selling will soon reverse and start buying. So whenever you spot a reversal pattern at the resistance zone, it's trying to tell you that there is likelihood or possibility for that chart or for that market to reverse and start selling. And whenever you spot a chart pattern or a chart formation at the support zone, it's trying to tell you that market has been selling, especially the reversal pattern, that there is possibility that the market will reverse and change direction. While the continuation pattern is trying to tell you that this market has been buying, it's not yet time for it to reverse. It's not yet time for it to turn. It will continue buying continue buying and continue buying. Why? When you spot a continuation pattern at the in a bearish trend or in a down trend, it's trying to tell that this market has been selling. It's not yet time for it to reverse. It will continue selling. It will continue selling and selling and selling and selling and selling. So this is the things we are going to check and watch out today. So we move over to the reversal pattern. So those of you having challenges in the market, how do I know that this market will reverse? I've been buying this market, especially those swing traders taking position for long. They play straight for long. For you to play straight for long, you have to know where the market is and how to trade it profitably. This market, will it reverse soon or will it continue buying? This market, will it reverse soon or will it continue selling? There are many ways to know this. And number one, we start with the reversal pattern. Number one for the reversal pattern is the head and shoulder pattern. Head and shoulder pattern. Head and shoulder pattern. Your head, your shoulder, your shoulder. Just take, have a mental picture of a human. The head, shoulder, shoulder. Head, shoulder, shoulder. You have the head and the shoulder. Now, what does this mean? You see a market buying, 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 buying. For you to have a head and shoulder pattern established, it means that the market must have been in an uptrend for long. For some time, the market has been in an uptrend. For some time, the market has been in an uptrend. You see a market buying, 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 doing these normal lows, highs, higher lows, highs, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But it gets to a particular place after making this higher high here, did this normal retracement or it's a retest or pullback. Now pushed up, which is this number 2 that is highlighted here. Now when he tried to do his pullback or retracement, he didn't just stop here. He didn't just stop here. He didn't just stop here. He broke it back to the same place. Getting back to this place could not take off this zone here. Could not take off this zone here. And when I was teaching support and resistance, I said their inability for a market to break a resistance zone shows that the buyers, they are beginning to lack momentum in the market. So you can see doing this, could not take off these highs, now coming back low. At the end of the day, it formed a pattern, a particular pattern in the market known as the head and shoulder pattern. Now whenever you spot head and shoulder pattern, allow it to form completely. Don't say it's trying to form small. No, there's nothing trying to form small. Allow the head and shoulder pattern to form completely in the market. Don't say, oh, it has formed this other head and this other left hand. Allow the second or the third hand to form completely before you enter the market or before you short the market. Allow it to form completely before you short the market. Don't say this first and second they formed, so this third one there is possibility. No, there is still possibility that the formation will be nullified or the anticipated formation will be nullified. There is possibility that 100% chance that the anticipated formation will be nullified. But the ability for you to understand this, following it the way it is, follow it the way it is. It's okay. Then after this formation, now remember when it comes to chart patterns, the higher the time frame, the more reliable it is. What do I mean? I've been explaining this over and over and over again. If you're a day trader, understanding and spotting this head and shoulder pattern in your D1 and H4 is better than spotting it in your H1 and 30 minutes. Not that H1 wouldn't play out, but it's stronger in D1 and H4. Now, whenever you spot this chart pattern and formation, you cannot see that the market, you don't think of buying the market anymore. You now think of looking for a way to short the market. Now, in the other way around, is this not a high? Is this not a low? Is this not a lower high? Is this not a lower low? So there is possibility it's not a lower low. So all you have to do is to wait for another lower high. All you got to do is to wait for another lower high at this particular place. You can now short the market. Wait for a lower high at this particular place, you can now short the market. What do I mean by shorting the market? What I simply means is by selling the so that is it. That is it for a head and shoulder pattern. So for you to be profitable in this forex market, you got to understand the head and shoulder pattern very well. Understanding it very well for you to be able to be profitable in this forex market. Head and shoulder pattern. I specifically choose this pattern or the formation so that by the time you go to your chart, it will be easier for you to spot it. Now remember, this particular type or this particular pattern is found at the resistance zone. Now there are some found at the support zone. When you spot head and shoulder pattern at the support zone, it's no longer known as head and shoulder pattern. It's now known as inverse head and shoulder pattern. It's the direct opposite of the head and shoulder pattern you spotted that is found at the resistance zone. But this particular type is found at the support zone. This particular type is found at the support zone. So what does that mean? Market must be in a downtrend first. You can see moving down, doing its normal retracement, moving down, doing its normal. But at a particular low, he did this, so to this place, trying to do this, so to this particular place. At the end of the day, it broke here. You can see it's a buy. When you spot this formation in the market, capitalize on it and make judicious use of it and make profit. Now, after breaking the neckline, this is the neckline. After breaking the neckline, you can now wait for a retracement, pull back before you now buy the market. Remember, if you don't understand what pullback is, I showed it in our last class. You can also go ahead, watch the videos on trend, types of trend. You understand what pullback is, or types of market: trending market, ranging market, choppy market. So all these, we're going to see them on the chart. Those of us having challenge spotting them on the chart too, but we took these ones from the chart. So we move over to the next type of reversal pattern. Remember, all these patterns I'm showing you, whenever you spot them in the market, they are trying to tell you that this market will soon reverse and start buying or start selling. But for the inverse head and shoulder pattern, it's trying to tell you that the market will soon reverse and start buying. For the head and shoulder, it's trying to tell you that the market will soon reverse and start selling. So we have the next part, which is the double top. Double top, out of every pattern, double top is very common in the market. You're going to spot it right here. Double top is very common in the market. It's a reversal pattern found mostly at the resistance zone, and it's very common in the market. It's a reversal pattern found mostly at the resistance zone. So you see the market buying. But when it got to a particular peak or a particular high, he said, okay, no problem. He did a retracement, which is not bad. Now, going back again, could not take off the first peak or could not take off the highs of the first peak. The highs were rejected, and you see the market coming back. Now, before you enter the market, you must always look out for what? Confirmations in the market. So you look at this, confirm, after doing the, allow it to form completely, then after formation, you now wait for a retracement or a pullback before entering the market. Let me show you what I'm trying to say or talk about. Okay, there's a good example here. Okay, so this is what I'm trying to say. Now you can see markets making higher highs, buying, being in a bullish move, buying. But when you go to this particular place, now this is a good example of your double top. Don't say this other top is higher than this other top, or this other top is less than this other top. No, they are both tops in the market. You can see when you watch or when you look at this, you will find out that this top here, when market got here, he said, okay, did this normal retracement, which is not bad. But when it went up or tried going up again, it couldn't take off this other height here. It just stopped somewhere here, so forming a double top pattern in the market. Look at it, double top at this particular time, and it's even in D1. This is good. At this particular time, whenever you spot something like this, you no longer think of buying the market again. All you have to do traditionally is to wait for what? Confirmation in the market. All you have to do is to wait for confirmation or wait for a retest in the market before selling the market. Right now, see the market here breaking this. It's not advisable to sell here. Let's say you spot something like this. You spot something like this. You see the market breaking this zone here, breaking it back to this place around here. You see the market here. It's not advisable for you to sell here. You got to wait for a retracement in the market or a pullback in the market before selling. Traditional, I'm using this for those of us still finding it difficult in the market. So when you find the market breaking a zone, a particular zone in the market, all you have to do is to wait for retracement. Wait for retracement. Wait for retracement in the market. Wait for retracement in the market. Wait for retracement in the market. At least back to this neckline. At least back to the neckline, somewhere here. Then after that, it doesn't mean you should start selling. No, you don't start selling, because sometimes you find the market going as far as this, moving as far as this before selling. It's not still bad. It's common in the market. But at least the market should be able to come back to this neckline or retrace back to the neckline. So when do you now sell the market? When do you now sell the market? Now you have to wait for confirmation. There is what we call candlestick confirmation. There is a video on candlestick. Whether you have the engulfing candlestick, gravestone doji, or that concerns candlestick confirmation. Then after that confirmation, you can now short the market, which you now expect the market to make this kind of move. Maybe you take your profit, your first profit, somewhere around here. Maybe you take your first profit somewhere around here in the market. I believe we are understanding. Understanding. It doesn't matter how little it is. A double top is a double top. A double top is a double top. That is it for double top. So now I was talking about inverse head and shoulder. This is not a perfect inverse head and shoulder, but if you look, this is also, don't say because this place there is an extension, but look at it. It formed the top here. Don't say it went as long as this. No, or this other shoulder is long. This other top is way bigger than this other top. No, they are both double tops in the market. A very good double top in the market. So you can see at the end of the day, market is sold. So all you have to do is wait for the market to break the neckline. You can see the test. When the market does a retracement, maybe using your trend line strategy or whatever strategy you use. Let's say you're using a trend line strategy. You draw your trend line, allow the market. But if you are not using, you draw your trend line rather. You draw your trend line whatsoever. But if you are not using the trend line strategy, not everybody uses the trend line strategies. Yes, but if you are not using the trend line strategy, all you got to do is to wait for a retracement depending on what you are waiting for or looking out for in the market. Traditionally, you can now short the market, continue selling the market. So you can see double top here, double bottom here. It's very common and it plays out. It works very fine and very well. You can see that wherever we find it, it tends to play out, and it's usually found at those sensitive zones, those sensitive support and resistance zones, usually found at those sensitive support and resistance zones in the market. So we move over to the next thing we have, which is known as the double bottom. Now this double bottom is found at the support zone. I just found out that maybe an oversight will mix the other one to this. but this is a double bottom pattern. Now when you spot it, it's showing a buy in the market, so whenever it's spotted, you capitalize on it. So let me show you what I'm trying to. This is not a double top, this is a double bottom. If I say that, that's a double bottom, that's a double bottom in the market, that's a double bottom in the market, that's a double bottom in the market. So the difference is that double top or the M pattern is found at the resistance zone, while double bottom or the W pattern is found at the support zone. So let's move over to the next thing we have in the forex market. Next thing. So do well to spot all these things on your own. One of the ways for you to be profitable in this business is to be able to spot them on your own. When you're able to spot them on your own, it is very easy for you. It's very easy for you. Now, this one will be even easier for you. Triple top in the market. Triple top, they have two types. We have the triple top and we have the triple bottom in the market. So what does triple top mean? It's just like a range at the resistance zone, a consolidation. At this particular time, we are not talking about double top again. This one is triple tops at the resistance zone. Having three tops at the resistance zones is still a reversal pattern in the market. But before you capitalize on it or you start selling, allow the market to break the nearest support zone. You can see on this particular place, the market was actually buying. Got here, formed the first top, couldn't take off the top, came back to this place, bought to this other place, formed the second top, couldn't take off the second top, sold again, third top. So at the third top, that was when it had the momentum to come back to this support zone, breaking this zone. So you must allow it to break it, then make a retest or a retracement before you short the market or sell the market. It's very simple. It's very simple. So all you got to do is just to monitor it. This one is found at the resistance zone, while the triple bottom is found at the support zone. You can see 1, 2, 3. I will quickly show you a good example of this. Look at 1, 2, 3. This is simply known as triple top bottom. It plays out. It must not be the way you find it on the slide or you saw it on my slide. It must always play out in the forex market. So this is a triple bottom. This 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Triple bottom in the market. And at the end of the day, you wait for a breakout in the market. You can see there was a breakout breaking the resistance zone, holding them, and there was a retest. You can now go long for the market. Let's see if we can also find other triple a triple top for this same market. But if we don't get it, I believe we have a mental picture of okay, this like four tops. But if it's three tops, you see 1, 2, 3. But there is still another touch here. So at the end of the day, so that you can see that the market went down. This like four tops, not only three tops. These four tops. But just have a mental picture that is like a ranging market at the resistance zone, and after that there was a breakdown. Or break up. So that is it. So we have 1, 2, 3. This like a four tops too. But triple tops, they are not that common, but whenever they are spotted, they tend to play out in the forex market. So I believe we are learning properly. Now, we also have the cup and handle pattern. It's still a reversal pattern in the market. All you got to do is to go over there, watch it, observe it, try to see if you can trade with it, and you see it working for you. Then we also have the other patterns known as the continuation patterns. Now, what are these continuation patterns? Continuation patterns are patterns whenever they are spotted in the market, they show or they pass information to you that this market has been buying, it's not going to reverse soon. It will continue the buy. Or this market has been selling, it's not going to reverse soon, but we continue the sell. This they are together known as what? Continuation pattern. They also help in the market. So the first one we have here, I took time to set it for us because it plays out and is very nice. It's known as the ascending triangle in the market. Ascending triangle. Ascending triangle in the market. Now, how is this ascending triangle? This ascending triangle is found only in an uptrending market. In an uptrending market. An uptrending market. Now, you see market, let me look for, I have a, okay, you see market, this is a good example of what I'm trying to show. You see a market doing its normal buy. That's why I use this. This is a low, a high, a higher low, and a higher high. But at a particular form, it start forming something like a range. In between the trending market, it start forming something like a range. And ascending and triangle is a pattern. It's like a range, but it's a market that is ranging towards a resistance. If you observe here, this low is higher than this low. 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 So this is the particular place you have to consider. It's ranging, yes, but it's ranging towards a resistance. So this type of market is very easy to trade. It's very easy to trade. When you spot an ascending triangle, it's usually a sweet market. Ascending triangle is usually a sweet market. When you spot it, all you got to do is for you to capitalize on it and make profit from the market. Capitalize on it and make profit from the market. You can see consolidation here. But the consolidation, when you look at it closely, you can see that the candlestick that will be forming here will be tending to the resistance zone. Resistance zone. Will be tending to the resistance zone. Resistance zone. Hitting at the top. Hitting at the top. Hitting at the top. Hitting at the top. Until finally there was a breakout in the market. Now, this type of market, how do you trade it? Wait for the candlestick. The candlestick that broke this resistance zone, after the break, something like this. After the break, something like this, you can see this candlestick that broke this resistance. After the break, you can now go for a buy. Because most times after the break, you find it difficult for the market to retrace. But conservatively, if you are new to the market, conservatively, you allow the market to do a retracement before it will continue the buy. Conservatively, you allow the market to do a retracement before it will continue to the for the buy. But if you want to catch it, and if the market is very liquid, go and check browse what liquidity means in the market. Yes, so if the market is very liquid, just allow a break. After a break, and they close, not only a break. Some persons, they will be very funny. They allow the market to break. Then when the market breaks, they won't even allow it to close. What do I mean? If they are using the 1 hour time frame, they won't allow it to close in that 1 hour time frame. They go buy in the market. At the end of the day, there is a big rejection in the market. No, you can see this one. At the end of the day, it closed above, and you can see a good buy. It's only found in an uptrending market, and whenever you see it, it's very good, very much good for you to capitalize on it. So we have the direct opposite, which is known as the descending triangle. This descending triangle is like this. It's still like an ascending triangle, but in a descending format or in a downtrending format. What do I mean? You see a market selling, doing normal retracement, sell, normal retracement, sell. But when it got to this particular place, it did a retracement, but like a range, consolidation in the market, started ranging in the market. But the difference is that yes, it's ranging, but it's ranging towards the support zone. At the end of the day, there will be a break in the market. You can see that this other high is higher than this other high, is higher than this other high, is higher than this other high. And at the end of the day, there was a break in the Forex market. So that's why you see it this way and see a descending triangle. Now, one thing is for you to spot it on the chart, on the slide. Another thing is for you to see it on the chart. Now, most persons will be like, oh, what I showed you here is not perfect with what I showed you here. It's not so. Everything happening in the market is known as price action happening in the market. So you don't expect the market to be the same way you want it to be, or to move in that direction. But if you look at this closely, you can see that it's forming a descending pattern towards hitting at this support, and end of the day there was a break. So you either wait for a candlestick to break it, either wait for a candlestick to break and close below, then you follow suit, you sell, sell, sell. Wait for a candlestick to break below, then you sell, 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 sell. Or you wait for a retracement just like this conservatively and wait for a confirmation. In all this, you got to wait for confirmation before taking your entry in the forex market. Now, we also move over to the next one. Flag pattern in the forex market. Flag pattern in the forex market. How is this flag pattern? This pattern is only seen in a strong trending market. Flag pattern, they are mostly seen in a strong trending market. They are patterns that forms during a strong trending market. In a strong trending market, you do not wait for retracement. Now they are trying to tell you that either the buyers or the sellers are strong, very strong. So in this type of market, you don't wait for retracement in this type of market. For flag pattern, you don't wait for retracement in the market. Now you see a market, there are some market you see spiking high, very, very high in the market, very high. They spike so high in the market. You see it moving, pam, pam, no retracement. When it tries to do a retracement, instead of it to do a retracement, it forms something like a flag. Remember on your flag, any country flag, it's just like a form of consolidation, a form of consolidation. And at the end of the day, you find that there is a break above. You find that there is a break above. That break, or the break you see going higher, when it breaks above, don't even wait for retracement. The candlestick breaking above and closing above. Most persons will see it as an aggressive entry, but not an aggressive entry, because this market is in a strong trend. Waiting for retracement in a flat, in a strong trending market is like you waiting for something you are very sure that it's not going to happen immediately. It can happen. There's nothing impossible in the forex market, but conservatively, as it breaks and closes above, you enter the market for a buy, for a bullish flag. Then for a bearish flag, something like this, you can see just a form of consolidation in the market, a form of consolidation. You can see powerful candlesticks, pam, bam, like boom, 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 like moving very well, moving down. You can see it's moving, moving, moving. Then at the end of the day, it closed below. At the close, you just enter the market. Don't even wait for no seconds. So this is the general stuff I'm trying to show us about. You can see it. These type of markets, you can see how the movement is. You don't wait for a retracement, just form a flag. You can see like a normal flag. A close above, you buy. A close above, you buy. You can see like a normal flag. A close below, you sell. Like a normal flag. A close above, you buy. Like a normal flag. A close below, you sell the market. Now, this is like a rising wedge. This is also a continuation pattern in the forex market. You see a market selling, boom, 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 selling very well, selling down. Rising wedge is spotted in a hand trending market. Forget about the name rising wedge. It's spotted in a hand trending market. Sellers taking over the market, selling. At the end of the day, you find something like a rise, moving as if the market is trying to go against, or trying to move against, or trying to go the opposite direction. All you got to do is just to spot it and wait for confirmation. This type, you must not wait for retracement to a break and close below. You enter the market for a sell. A break and close below, you enter the market for a sell. So we also have the falling wedge. The falling wedge is found in an uptrending market. The falling wedge is also found in an uptrending market. You see the market making this type of move. You can see it's making move, buying. And at the end of the day, it's finding it moving as if it's trying to go against the trend, trying to push back. But at the end of the day, look at what it's trying to do. all you have to do, one of the ways, there is no need for you to start cramming or try to memorize this pattern. The only way for you to understand them is for you to be used with your chart. At the end of the day, you can see there was a break. You can see the entry here. You can see the entry here. Then you set your stop below, below, below. So there's no need for you to start memorizing them. All you have to do is to go over them over and over again. There are still many other chart formations and patterns, but this one is this is what I'm trying to show us for today, to introduce us to the many other patterns. I will start by showing other types of patterns in my next video, but this pattern is very, very important in the market. Remember, while you are watching, remember to share, like and subscribe to this channel, so that by the time I take other videos, by the time I bring up other videos that are very helpful in the market, you will be able to capture them, you'll be able to watch and gain knowledge from them. Remember to like, subscribe, share to your friends, families, those of them that have knowledge or need knowledge on trading. So you can see this is a good falling wedge, and at the end of the day there was a break to the upside. As a way to recap, I started by saying, introducing us to the chart pattern, and I introduced two types. We have the reversal patterns, we have the continuation patterns. I say reversal patterns are patterns whenever they are spotted in the forex market, they are trying to tell that that market has been buying will soon reverse and start selling, and that market has been selling will soon reverse and start buying. While the continuation patterns are patterns whenever you spot them in an uptrending market, it shows that those markets will continue buying. Example, or whenever you spot them in a downtrending market, it shows that those markets or that type of market will continue selling. Example of the reversal pattern, we have the head and shoulder pattern. Also read them up. You can also send me a DM. I also send some books to you for free. So you can see inverse head and shoulder. These are reversal, double top, double bottom pattern. We have the triple top pattern, is still also a reversal pattern. We have the triple bottom pattern. I showed us a good example here on the chart. I also went ahead to introduce us to the copper handle. All you got to do is just to study them over and over on the chart. Then we'll move over to the continuation patterns. We introduce the ascending triangle. I gave a diagram here. We introduced the descending triangle. Yes, I introduced the descending triangle. To us, something like this too, descending triangle. I also introduced the bullish flag pattern and bearish flag pattern, and we had this overall picture. So we also have the rising wedge and the falling wedge. So do well to share, like and subscribe to your friends, families, everybody in need of trading. Stay tuned on your notification, so by the time I send other videos, you're gonna see them. Thank you very much for all you do. Thank you. I wish you a successful trading. Bye now.